For the time being, let's focus back on Vedanta. They have announced a big restructuring, and as promised, we have Vikash Singh of Phillip Capital who joins us on the show. Hi Vikash, thanks so much for joining in. Well, this seems to be a temporary fix, right? We need to see what happens next. Can the parent go ahead and sell one of these entities? So what comes top of mind is the steel asset. Could you tell us, do you expect them to sell that particular asset? And if yes, what is a rough value they can get for a couple of these assets?
Good morning, Nigel. Yes, they have already indicated that they would like to sell the steel assets as well as the ferrous mines as well if possible. Last, if you see that in the IBC process, most of the assets have gone up to 70% of their replacement value. So given that it's a long product portfolio and also currently has a potential to reach up to 3 million ton, so they would get roughly about I would say that roughly about 3,000 to 4,000 for the existing business and a couple of thousand crore for more for the potential depending on the civil work or the land bank they would have at that site.
$1 billion is what they can get for this asset or more?
A little bit less. $1 billion would be a higher side of the valuation, because these assets are not that strategically important. For example, last assets, Meeranchal Parts, which bought by Tata, was at a pretty higher rate because of the land bank as well as the strategic importance to Tata. But this is not very strategic important to anybody at this point of time.
Right. Vikash, hi, good morning. Just a quick word. Now, this entire plan has been put out, right? But this will require many approvals, from lenders, shareholders, regulatory authorities, etc., etc. Does this act itself, I mean, it provides flexibility down the line, but there are hard payment dates, right? Repayment dates in FY24 and then I think early FY25. Does this move help towards meeting those repayments, in your opinion, Vikash?
See, the timeline is 12 to 15 months. So definitely, though the flexibility coming in order to part sell this stake in this asset, they might not be able to meet the January deadline of $1 billion. So that is something which is the immediate of concern, and probably they have to dilute some more equity, or in case if they don't manage to refinance the debt as of now.
Vikash, so tell us, overall, you spoke about the steel assets. Let's talk about all the 5 entities that are getting formed. There's also the energy assets which were under the erstwhile K in India. Do you see any value unlocking, quote unquote? Do you see that happening in any of these listed entities eventually as they list? And also a word on Hindustan Zinc, because there also this company is talking about potential reorganization. Now that will require a government approval, so that's a big one. But what would you expect on the Zinc side?
So basically, out of all the assets which are getting demerged, aluminium has potentially the best unlocking potential. Once it will become pure play, they are backward integrating into alumina as well as a fully integration into thermal coal as well. That would come in by FY25 end. So the profitability of aluminium business has a significant upside potential, and that would also spell out the best value unlocking thing as well. In terms of Hindustan Zinc, basically, they have decided to also bifurcate this segment into 3 different parts. Zinc and lead would be into one segment. Silver is another, and recycling business into third. We have to see that how they are going about it. But the way we see that they would like to get a better valuation for the silver division, because silver is getting bigger and bigger. They are about to commission their fumer as well. So silver, which is currently 750 KT, can go up to 1,000 KT in couple of years' time. So probably they are looking to unlock value. But in terms of approval, yes, we have to see that how the government reacts. As of now, there is no cash outflow to the VRL or nothing like that. The Zinc International they want to buy. So I don't think that the approval would be a difficult one in terms of Hindustan Zinc. Similarly, in Vedanta, they need 75% of the shareholders' approval by value. 63.7% is already with the promoter in Vedanta Limited. So out of the 7% minority shareholder, they would require roughly about 12% approval. So that is also seems to be easier take at this point of time.
So you believe the shareholders' approval could come through for both these two, Vikash, but I would be interested to see whether...
Limited, most likely.
Most likely.
Most likely.
And for Hindustan Zinc, we'll have to wait for the government of India.
Yeah, government, because minority shareholders are negligible, just 5%. So it all comes down to the government thought process.
I think the street will be interested to see whether or not they get the approval of the creditors, because that's going to be quite important. Now, Vikash, final question before we let you go. You're in minority, actually, because out of the brokerage reports that we're getting in there, I think your target price is one of the highest. As a house, what is the call you'll have on the stock, Vedanta Limited?
So we have a buy call simply because the stock has corrected since our last report. We haven't changed our target price from 290. It's just that the stock has corrected, so we have upgraded it to buy. We don't think further downside from the current levels and does not factor in the default from the Vedanta Resources at this point of time.
Okay, so not factoring in any possible default and one of the highest price targets on the street. Got that, Vikash. Thanks very much for weighing in. Let's see how the story unfolds. I'm sure we'll have more conversations on this in the coming days and weeks. But